Hi and welcome to the Market Alert for Friday the 15th of January 2020. So a lot to get through today, huge amount of news. So we'll kick off with that first, just to give the backdrop of what's happening overnight. It's been a quiet week during the day sessions, obviously because we're waiting for the Biden inauguration. But anyway, yesterday the market, cryptos and small caps surged again. Dollar shrugs ahead of Biden's budget bonanza. Meddling with the primary force of nature, money. Well, also, I'd just like to say thanks for those who commented yesterday and sent messages about this photograph of Biden. I didn't spot it at the time, but noticed that he's got his hands clasped in the praying position and the halo, the anointed one. Amazing. Unbelievable how they're portraying all of this. But anyway, let's stick to the news. Biden unveils 1.9 trillion COVID stimulus plan. Now we had this 6 trillion in March, and again we had the same rhetoric. We have to act now. I'm getting a bit wary of these stimulus plans. None of them have worked. Absolutely not a single one has proven beneficial, apart from the stock market and blowing asset bubbles. The people never benefit. It's just him, whether it's Trump or not, just him. You put Trump there and their cronies, and it's the taxpayer that's picking up the tab on this lot. But as I said a few days ago, as soon as he gets in, job number one, keep the printing presses going. You'll be able to see the smoke this side of the pond. And eventually, as this article says, we'll end up with Biden's banana republic. The problems in the currently semi-paralyzed US economy will escalate at a rapid rate, and the Biden team will attempt to plug every hole at all levels, from a minimum wage to saving major corporations. But sadly, banana republics don't survive by printing worthless money, and that is precisely what they're doing. I said before, get your popcorn ready. And as I've also said, this is Obama 2.0, as Biden prepares to wage war on the NRA. Gun sales erupt. A substantial increase in sales of firearms and ammunition since pro-Trump insurrection stormed the Capitol building on the 6th of January. Because they know what's coming, and they're not going to go down fighting. Then the sycophants are out. Tom Hanks set to hoist Biden's inauguration TV special. To host, not hoist. To host Biden's inauguration TV special next week. Snoozed fest incoming. It just tickled me. This sub-headline here, I thought it was great. God, I think it would be a snooze fest. It was bad enough with Trump. Biden taps key architect of Obama's war in Libya to head USET. This is interesting because, as I've said, it's by Obama 2.0. And one thing I will say for Trump, if I'll say nothing else, he didn't take the US to war with a new country. And I can guarantee you now, without a shadow of a doubt, watch out, Iran. Now Biden is in there as well. They'll be creating the narrative shortly, once they've printed the 2 trillion. And then the fun starts on the other side of the coin as well, because Georgia Rep. Republican pledges to file article of impeachment against Joe Biden. Following day after his inauguration, it's time to take a stand. So the nonsense hasn't stopped on either side from this. So it just goes on, doesn't it? So that's a roundup of the main news. Let's just have a look at the implied volatility. This moving up slightly yesterday. And I can see why. It's like they had foresight that there was going to be a bit of weakness overnight. So the implied volatility up, and also still green in the coloured version. But I would suspect that that's not going to be the case if the markets continue lower, as they've started to overnight. So let's have a quick look. And here we can see this in the Dow. They're moving sharply lower overnight. I don't know the reason at all at this point. I haven't seen any news to indicate why, but price is down sharply for the Dow there on the overnight. Let's just have a quick look at a ballpark figure of how much prices have dropped. So down, it's 271 points. It looks a lot more because the markets have been quiet, but even so, it's still a big mark down there for the Dow. Meanwhile, in the German DAX, we'll grab the right chart and go to the daily. You can see also this is down as well. So let's have a quick look at this one. down 116 points again, which is quite a big drop. I mean, that's more than it traded yesterday, as you can see from the upthrust. But what's interesting from that upthrust is it's a selling pressure upthrust for the daily chart at the 62% retracement as well, which we've had drawn in. I've removed the downside fibs because what I'm going to do is to draw in the fibs from this low to this high, because I just want to see on a smaller time frame down to this low where prices or which fibs are likely to lend some sort of support should this selling continue today. And if we go through this low, then I'll revert back to this low and this high that we had in there originally. So we're already through the 38% overnight and the 50, and there you can see that we're currently sitting at the 62% retracement, and then with possibility of going down to the 89 there. So let's have a look inside the 2 minute overnight as well. Prices started to fall, which you can see they're straight off the DP and the 200 MA, which is indicated here. And then moving to the downside to the S2. So the S3 is generally where prices find support, and a break through the S3 will then see prices continue lower. The S3 is at 845. So let me just go back to the daily chart there. So it's around 78.89, isn't it? Once you get to that level, 55. And let me just check that again. 845, yeah, 845. So just between the 78 and 89 is where that support is. And if that's taken out, then we're likely to take out the low of a few days ago, which I would also mark up on the intraday chart as well, which is 13,800, which obviously is one of the big round numbers. Whoops, I was supposed to do that. And then again, which is going to be this one here. So if you break the S3 on the downside, this is where you want to be looking. Of course, that we wanted to do their best to get the market to the upside, so be aware of this also. And whatever the overnight weakness is, they will hopefully be able to take that away from the market and bring prices back. But I'll just use this black line to show where that low of this day, which is the 11th, which is Monday of this week. So that's a roundup of where I'd expect the market, if it continues to the downside, to go. If not, then we're going to get a reversal and then head back to the upside as per the pivots in the 2 minute chart. And also obviously the daily pivot is going to be crucial. The low for starters, the 200 and the DP. Okay, let's have a look, see what news we've got today. And we've got, no we haven't, because that was yesterday, so let me just refresh this page. Friday, we've got, oh blimey, Biden speaking today at 12:15, so that's going to be interesting. So they are wheeling him out now, so he is ready for Tuesday. There's nothing that can be done to stop Biden coming into office now then. So yeah, he's going to be speaking at 12:15. So it'll be interesting to see the Dow's reaction when he does speak, and also the precious metals markets as well, if he's going to be spouting on about his $2 trillion that he wants to print. Okay, let's have a look at what the market did yesterday, and let's go back to the morning. And we were already trading above the high, and at this point, I am missing in action. I had to take my wife to work, so I got back just after this point here where the market opened and shot to the downside. And you can see why prices found support here, because you've got support here to the left. Quick shake through, you can see the huge amount of buying that came into the market at this level as well. And then you'll see prices testing this area. You've got some selling in the bar here, but notice that the close of this bar has come off the lows and the volume has all of a sudden dropped, so the selling that was there has disappeared. And then you've got the buying, which is the same as the previous bar, or just a bit greater. Range of the bar is narrower. Got the high, as I've said 1,000 times before. When you get the market above the high, you're free then to move to the upside, and that's exactly what we see in just a moment. We get a bit more of an attempt to push lower, but prices stop at the 76% retracement. You can see there that we've got the equivalent of what we had in the other bar. So there's still resistance to get through the high, because there'll be a lot of sell limit orders at the previous day's high in the hope that the market will continue lower for the day. But if you understand the backdrop of printing money, QE, and keeping the asset price bubble going, then you're fighting a losing cause when you get to the high. You might get a short-term trade to the downside, but as you'll see again here, you've got a lot of volume, market coming off the low, and prices sitting at that 78% retracement, and then starting to move back to the upside. And the selling's gone because that bar moved up with ease, as you can see on the lower volume, and this is the one I'm talking about here. And then prices now sideways, test again just to make sure, a lot of volume, and then they start to bring the market to the upside, straight to the 200 MA, and then through the entry price and up to the target. And immediately prices are hit with some selling coming into the market, because we've got this resistance to the left, and also you've got the 14,000. And again, 14,000 like the high. When you get into psychological numbers, there are going to be sell limit orders, because traders again will think, well, we got to the psychological level of 14,000, and again we should see a bit of a pullback, so they'll try and take advantage of that. But the key to this, when this happens, is to watch the 5-bar moving average. If prices aren't closing below the 5-bar, then they're free to move back to the upside, and that's what you're seeing happen there. However, you'll see in this bar here that prices put in some selling there. Am I in the right bar? No, I'm on the wrong bar. No, sorry, I'm on the wrong bar. It's this one. I say didn't look right. So no selling pressure there. I was looking for it, but it's not there. And then prices become sideways, run out of steam, and then start to come back. As soon as you get back below the 5-bar, got back to the 14,000, and then they managed to use this to drive prices lower. Must have been an abundance of orders there. But as I've said, these are short term, given the backdrop of the bull market. So what I've done here is measure from here to here, and we can see that we've got support at 62, and the 78 is just below it. So prices trade sideways. They manage to move lower. We get through the 62, and then we can see again we're stuck at the high. Now, as I keep saying, they'll want to bring prices off the high if they can, just to keep that bull market intact. And also, if you notice here as well, if you just draw this line down, the volume is about 80 or 90% of this previous bar that drove through, and prices have managed to put in a narrow bar and turn around at the high as well. So there has to be some sort of absorption of volume, because you would expect it to continue to the downside there. Prices then come all the way back very quickly, which is why you saw the trade cancelled here. Just looking at what was going on, I said, I'm going to get out of this one, because I'm not happy with the way it was being played. On the upside, it's no problem, but on the downside, sat at the high at the 62% retracement, and this is classic, bring it straight back. It doesn't matter about the volume, because they'd already done the job there of absorbing. It was just a matter of being able to have the opportunity to drive prices higher, which is why you're not seeing the big buying bar that you would normally see. Prices back above the 200 MA, a bit of resistance there. Now we've got to get through the BRN, and they drive prices through. There is an increase in volume, but not anything like the sort of big green bars that you see here. That's but there is an increase to drive through there. But again, immediately through this, the market starts to lose momentum, and now we can see there is some selling around, because prices have come back and the volume is more or less the same as the bar that drove through. And don't forget, we're dealing with a very short, narrow range here. So you can see the battle continues for some time, and prices come back, as you'll see here, to the 200 MA. And then they reverse it and start to move back again. So it was worth This one was worth it because the stop loss was below the high, and we've got the 200 MA there as well. The 5's above the 20 and the 20's above the 200 as well. And they want the market up. That's the most important thing. They'll do whatever they can to keep this market moving to the upside. So I've drawn in some fibs from this high to this low just to see what the market's going to do. And then we get a bit of potential weakness there, and that is selling pressure weakness there. But all of a sudden, the market absorbs and drives through, which is what you want to see. However, given the market's sideways and has been all week, immediately they get through. There is no follow through. There's no other buyers to come in and support this market. I moved the stop to break even, hoping that the market would at least attempt to move up to the R2, and ended up giving back the profits on that at break even. A bit of support coming in at this bar, but once we break the BRN, we can see prices trading back down to the high, bouncing off this once more. Again, keep the market moving off the high if you can. So I'm just going to fast forward through this now because there were no other signals. Drew in the Fib retracements just to see what it was going to do, and it just crept back slowly. And you'll see how the market stopped at the 89 there, with the selling coming into the market as well. So prices sideways, then they managed to drive through, and the high to the left, but again short-lived. The market just waiting for Biden. And in the afternoon, I was looking at the wrong chart completely. I was looking at the 5-minute, not the 2-minute, then switched, and you can see there we just got a move to the upside and trading up to the R1. Again, you see how the market was sitting. In fact, let me switch to the 2-minute chart from yesterday afternoon, and let me just reset the chart just so that you can see this. The market sitting just below the high. They managed to bring it back to the close in the morning session. You can see, interestingly enough, as soon as leave the desk, the market comes back. You can see them holding this at the close three times there. Another one back towards here, and then it just churns sideways. And again, as soon as the market opened, drove it through the high, the 200 MA, and then sent it to the upside there. Again, I wasn't paying attention. I thought it was going to be quiet like it was the day before. As soon as we got to this sideways move, I was distracted and then left the desk earlier. Attend a doctor's appointment. So yeah, you can see the prices then coming back, and then they were just sideways throughout the evening, and have moved lower since. So, actually, I know why the market moved lower yesterday. Of course, it was Powell, wasn't it? He was talking about, I think he let it slip that there may be some sort of tapering, which, of course, that was immediately dispensed with when Biden said he wanted to print $2 trillion. So that's the reason why the market then moved back to the upside, because that came back onto the table. So there we go. Let's have a look, see where we are on the latest on this. The market still down at the S2 level, and good move down to the S3. So watch these areas in the daily chart, and don't be surprised if we get a bounce straight back to the upside as well from the open as well. There's always that prospect of that happening as well. Okay, that's it for this one and for the week. So wishing you all a great weekend. Let's see what happens today. It's going to be an interesting day for sure. We see prices starting to make their way back here now just before the futures market opens. So yeah, it's going to be an interesting day. Hopefully a bit more volatility and market direction. As ever, thanks for watching. See you in the next one.